your money is at risk. Not maybe, not someday, but right now. And the scary part is most people don't even realize it. Think about your paycheck, your savings account, your credit cards, everything you've worked so hard to earn. It's under threat in ways most Americans don't see coming. You might be thinking, how could that happen? I'm careful with my money. But here's the truth, just being careful isn't enough anymore. The rules have changed, and if you aren't paying attention, the system could silently chip away at your financial life. Let's start with inflation. You've heard the term 1,000 times, but do you really understand how it works against you? When prices go up faster than your income, your purchasing power shrinks. That means that the $100 you saved last year now buys less than it did 12 months ago. Groceries, gas, rent, insurance, they all creep higher while your paycheck struggles to keep pace. And if you have money sitting in a standard savings account, earning a fraction of a percent, you're effectively losing money every month. But it isn't just inflation. Interest rates are rising, and that has a domino effect. Credit card balances, car loans, personal loans, they're all getting more expensive. That $20,000 student loan might suddenly cost more than you planned in monthly payments, especially if you're only paying the minimum. And if you're carrying debt, that same inflation and rising interest rate combination means your debt grows faster than your income. It's like running on a treadmill that's speeding up while you're trying to save. Here's something most people overlook: housing costs. Even if you don't own a home, rent prices affect you. Cities across the United States have seen rent rise 20 to 30% in just a few years. That increase isn't just numbers on paper. It's your disposable income disappearing before your eyes. You might think, I can handle a little extra, but compounded over months and years, it's enough to derail a solid financial plan. Now, let's talk about hidden risks in your own accounts. Banks and financial institutions are generally safe, but they're not immune to changes in policy, fees, or unexpected economic shocks. For example, some checking accounts now have maintenance fees that eat into your balance if you don't meet strict requirements. Even worse, investment accounts can drop in value quickly if markets are volatile. Your retirement plan, your stocks, even your bond funds are all subject to swings you might not be prepared for. And this is where many Americans are caught off guard. They assume their money is secure just because it's in an account with a trusted name on it. There's also a risk that's harder to see, but just as real: lifestyle inflation. As your income grows, expenses grow right alongside it. A new car, a bigger apartment, more subscriptions, dining out more often. These choices slowly eat away at your ability to save. Even a modest increase in monthly spending can wipe out hundreds of dollars of potential savings over the course of a year. And when unexpected events hit, a medical emergency, a car repair, or a job loss, that lack of cushion becomes dangerous. Let's take a practical example. Imagine someone making $60,000 a year. They put away $300 a month in savings. Over 10 years, that's $36,000 in theory. But if inflation averages 4% a year and they only keep money in a low interest account, that $36,000 might only have the purchasing power of $20,000 in today's dollars. Add a credit card balance with an 18% interest rate, and suddenly that cushion is not enough to protect them from financial stress. This is exactly why many Americans feel one paycheck away from crisis. Credit card debt is another silent threat. It's easy to underestimate how fast it accumulates. Carrying a few $1,000s might not seem like a problem, but at 20% interest, that debt doubles in just a few years if you only make minimum payments. And during periods of economic uncertainty, banks may tighten credit or raise rates, making it even more expensive to borrow. What seems like a small, manageable amount can quickly become a financial trap. And don't forget about global factors. Geopolitical tensions, supply chain disruptions, and energy price spikes aren't just headlines, they affect your wallet. Gas prices rise, groceries cost more, and companies pass on expenses to consumers. These events are largely outside your control, but their impact hits everyone the same. Your money's risk isn't always personal, it's systemic. The system itself can erode your financial security without warning. So, what can you do? Awareness is step one. Understanding where your money is exposed allows you to act before it's too late. Start by reviewing your monthly expenses and identifying areas that bleed cash unnecessarily. Are there subscriptions you barely use? Are you overspending on dining or entertainment? Small adjustments can free up hundreds of dollars a month. Next, look at how your money is working for you. Standard savings accounts barely keep up with inflation. Consider diversifying into higher yield accounts, treasury securities, or low risk investments. Even modest returns above inflation can preserve your purchasing power over time. Debt management is crucial. High interest debt is your enemy. Paying more than the minimum on credit cards, consolidating loans, or refinancing at lower rates can save thousands over a few years. Don't wait for interest rates to rise further. The earlier you act, the more you protect your money. Emergency funds are another non-negotiable. Life is unpredictable, and even small setbacks can become major financial challenges if you aren't prepared. Ideally, you want 3 to 6 months of living expenses in a safe, accessible account. That buffer lets you weather unexpected costs without relying on high interest credit. Now, this is where most Americans struggle investing with purpose. Saving alone isn't enough. Inflation erodes value, so you need to grow your money. That doesn't mean gambling in risky markets. Balanced approaches like index funds, ETFs, or low-fee mutual funds can provide steady growth over time. The key is consistency and patience, not chasing quick wins. And here's a re-engagement point. Think about your daily habits. Every small decision, from buying coffee to using buy, now pay later services, affects your financial safety. These micro decisions accumulate and determine whether your money stays secure or slips away. The danger isn't always obvious, but it's real and it's happening now. Another factor to consider is retirement planning. Many people assume Social Security or employer plans will cover them, but gaps often exist. Rising healthcare costs, market fluctuations, and longevity mean that relying solely on traditional plans is risky. Taking personal initiative to save, invest, and diversify retirement income sources is essential to avoid future financial stress. Let's pause and reflect on this. Your money faces risk from multiple angles: inflation, debt, lifestyle creep, market volatility, and global events. Each one alone is concerning, but combined, they can quietly erode financial security if left unchecked. That's why awareness, planning, and consistent action are not optional. They're survival tools. So what's the practical takeaway? Don't let your money sit idle. Make it work for you. Reduce unnecessary expenses, manage debt aggressively, build an emergency fund, and invest intelligently. Protecting your money isn't about luck. It's about strategy, and strategy starts today, not tomorrow. Before we wrap up, here's a final reminder: the economy is constantly shifting. Policies change, interest rates fluctuate, prices rise, and global events unfold. The average American who ignores these realities is vulnerable. But the person who stays informed, adapts quickly, and takes deliberate financial action can not only survive but thrive. In short, your money is at risk, but that risk is manageable if you understand it and act on it. Review your spending, protect your savings, reduce debt, invest wisely, and build a safety net. Make your money resilient against inflation, market swings, and unexpected crises. Remember, financial security isn't a distant dream. It's the result of deliberate choices and daily discipline. Take control now, or risk watching your hard-earned dollars lose value while you sleep. And if you want more insights, step-by-step strategies, and practical ways to protect and grow your money, subscribe to the Side Hustle Lab. This channel is here to help you navigate the risks, seize opportunities, and make your money work as hard as you do. Your money is at risk, but armed with the right knowledge and action, you can make it untouchable. Start today.